What's up guys, and welcome back to WSM Research. On this channel, we look into high-growth stocks and companies that have the potential to disrupt their industries. Some of our recent videos highlighted the fintech industry, the gaming industry, and the renewable energy industries. Today we are continuing the series with a SPAC involved in the space industry, with the company Rocket Labs. Before we continue, please note that we are not financial advisors, and this video is for entertainment purposes only. Make sure to consult with a professional before making any investment decision. Rocket Labs is a company that engages in providing small launch services as well as satellites and components for other spacecraft. They have been launching their current main rocket for more than 3 years and have been launching rockets in general for more than 6 years. During this time, they have made a total of 18 space launches, deploying a total of 97 satellites into orbit. In terms of private companies launching rockets into space, they are second only to SpaceX. Their launch operations are growing rapidly and currently have 3 interplanetary missions scheduled. In terms of private companies engaging in sending satellites into orbit, Rocket Labs is in a class of its own. Obviously, putting satellites into orbit is an extremely difficult engineering feat, and there are currently only 2 companies engaging in regular launches, including Rocket Labs. Within this market of insanely high barriers to entry, the industry is forecast to grow to $1.4 trillion by 2030, according to Wall Street Research. They have already successfully completed 18 launches since 2017, with the frequency only increasing with time. Their customers include both commercial entities and NASA, who they have missions scheduled with to go both to the Moon and Mars. This growth is forecast to allow them to achieve positive EBITDA within the next 2 years, and to be actually cash flow positive 1 year after that. By 2026, they expect to do more than $1 billion of revenue. These are estimates based on a $350 billion TAM in the industry they operate in, which is all areas of space. This includes things like data management and infrastructure, such as satellite internet projects, which are gaining more and more interest recently. They have multiple leading product offerings that lead in each of the main areas of space: launch, space systems, and space applications. But what do they actually do? Their operations only started in the past several years, starting with their first capital raise in 2014. It only took 4 years for them to put their first spacecraft into orbit, and in the next 2 years, they were already the most frequent launcher in the world. Their satellite division, which they call the Photon program, was started in 2019, and within a year was awarded multiple NASA missions to go to the Moon and set up a propellant depot. In 2020, they had already scheduled missions to the Moon, Mars, and Venus with customers. Since 2020, they also entered into Space Applications segment, which is set to provide space-based services to companies who do not necessarily want to maintain their own satellite systems. The total addressable market for this segment is absolutely enormous, because although very few companies are interested in sending up their own satellites, many are interested in subscribing to new data services that can only be offered via satellite-based infrastructure. Perhaps the most astonishing thing about Rocket Labs is just how quickly they have set up their operation. As one of the only 2 private companies launching rockets into space on a regular basis, one would think that it would take many years of engineering and failures just to get one successful launch. But that's what makes their story. With their well-known competitor SpaceX not planning to go public anytime soon, at least as far as they have announced, Rocket Labs' announcement that they will be going public through a SPAC was met with a lot of hype. The merger will raise about $745 million of cash to be used to fund future growth. The deal was announced in early March, and the stock immediately shot up by 36% on the news. However, since then it has given up most of those gains, and now trades at $11.87 per share. The original SPAC price was about $10 a share, so it's a relatively modest premium compared to other SPACs that have more than doubled following their merger announcements. This is especially the case when considering that there are so few viable space-related companies in existence. So what exactly are SPAC investors getting into with Rocket Labs? To find out, let's dig into their financials. Because it is still so early in the process, Rocket Labs and Vector Acquisition have not yet filed a prospectus. However, we can still make an estimate of their financial results and condition from their investor presentation. Keep in mind that because these are not official filings, we can't guarantee the accuracy of these numbers. Unsurprisingly, for a new company involved in space launches, they are currently cash flow negative and project negative EBITDA through 2022. Their unlevered free cash flow, which is adjusted EBITDA minus capital expenditures and increases in working capital, was negative $45 million last year and expected to widen to $76 million this year. However, free cash flow is of limited significance for a company that is making significant investments in their technology and factories, such as Rocket Labs. A potentially more telling sign is their revenue's compounded annual growth rate, or CAGR. They expect revenue to double this year to $69 million. And this forecast is based 90% on bookings which they have already secured, so it's not like they're just making up some number. Beyond 2021, if things go just as they hope they will continue growing at around a 70% CAGR. After their merger with Vector Acquisitions, Rocket Labs will likely have an incredibly strong balance sheet. Their total equity value will be an estimated $4.8 billion, while their enterprise value after subtracting net cash will be $4.1 billion. That means that they have more than $700 million of net cash after taking into account debt. This is a situation where not only does going public give everyday investors the opportunity to invest in exciting new companies, but it can actually help the company's prospects by funding its future growth opportunities. Unfortunately, Rocket Labs has not released any more detail on their financial condition or their revenue. Although they seem to be one of the market leaders in an industry that is poised to explode in the next decade, there's no way to know for sure if they will be one of the winners in the long run. It'll be interesting to look more closely at their prospectus later on in the SPAC merger process. Alright guys, that wraps it up for this video. If you liked the content, make sure to smash that like button and subscribe for future content. Also, leave a comment letting us know what stock you'd like to see a video on next. As always, thank you so much for watching, and we'll see you in the next one. WSM Research, signing out.